Wall Street rally, stocks surging, the S&P 500 and NASDAQ hitting all-time highs for the fourth day in a row. The technology sector and optimism over trade negotiations driving the major market gauges to those new highs, including the Russell 2000. Here now, Sam Stovall, CFRA Research Chief Investment Strategist. Sam, how are you?
Good, Dagan.
Great to see your reaction to this. The question in every investor's mind is, can this market keep going? What would get in the way?
Oh, I think it can. First off, we had a trifecta of new highs, the S&P 500, NASDAQ, Russell 2000. So when you've got that kind of breadth, when you have the widening out of the participation in this rally, that tends to be pretty good. We also recouped all that we lost in the correction from January 26th to February 11th. History basically says we go on to advance by almost 9.5% on average, and we don't stumble again for another 4 months. So not to say that that's exactly how it's going to play out this time, but usually when you hit a new all-time high, that tends to add to investor confidence.
So just to play devil's advocate, although I'm rooting for the bull market, let's go back to our earlier years. You know, this reminds me a lot of 2000.
Okay.
Okay, in 2000, that was the last time. You're saying yes?
I was saying yikes.
Okay. Well, you'll see where I'm going with it then. In 2000, that was the last time consumer confidence was this high. Okay, so we had the highest since 2000 announced last week. We were on the incredible trajectory. And then all of a sudden 2000 comes and we had a 2-year down trade, you know, starting with the dot-com bubble. It was all kind of, you know, a one-way direction, and then all of a sudden we had the turn. My question is long-winded. Do you think with a raising rate environment, you know, fiscal deficit concerns, and possibly based on where the yield curve is, the possibility of a slowdown based on what, you know, the yield curve's at least predicting for GDP, does that change kind of your horizon and thoughts at all?
I'm sorry, could you repeat the question?
Hey, at least he admitted that.
Yeah.
I admitted it.
I'm kidding you.
I had to get there because, you know, James caught me off track.
I'm sorry, I interrupted.
With the yikes. Did I talk about your book yet?
Go ahead.
No, those are good questions. First off, we're the second most expensive bull market since World War II, with trailing earnings being, you know, above the long-term average. Also, on an S&P 500 market cap to nominal GDP, we're more than twice as high as the average over the past 50 years.
This is kind of like a softball for you right now.
Well, but then, I think that we probably
Semicolon. Next thought. Go ahead.
Well, I got gooder grammar than most, but my punctuation is pretty bad. I think that we probably still have some life left because we have never slipped into a bear market in the past 65 years when interest rates were below inflation where they are today. We'd have to see at least 2 more rate hikes before we even equal the year-on-year change in core CPI. And then we would have to have 3 more rate hikes next year just to get close to that threshold. At first, we have the threat of falling into a bear market. So I still think that monetary policy is quite stimulative at this point. And with the Fed basically telling us what they're going to do, I like to say that a boxer is rarely felled by the punch he expects. And at least it's not going to come from the Fed.
And I guess comparing to 2000, hoping maybe this isn't a repeat, you don't really see the sort of pets.com phenomenon of lots of non-companies that are public, even though they're not real businesses and don't have real earnings.
True. You're not really seeing the exuberance that typically bull markets look like incandescent light bulbs and tend to glow brightest just before they go out. So I'm not getting the questions from the newspaper vendors as to, gee, which stock should I be buying, or them telling me which stocks to buy. So I agree. It's still investors are very skeptical about this advance. And so as a result, it might have some life left.
And they are willing to beat the stuffing out of a stock like Facebook.
Oh, sure.
When it misses and gives guidance that investors were shocked by. I know that Apple, Amazon, and Microsoft all hit new all-time highs yesterday, but they're not buying every tech stock hand over fist, to your point.
And I wonder about the techs. I mean, I look at regulation as probably good for the giants. They end up benefiting from it. But do you look at that as a negative? Does it make you worried about these stocks we're talking about, the FANGs?
Well, I mean, the FANGs, in my opinion, are very different from tech in general. Typically, tech is the best performing sector in a rising rate environment because they have the lowest dividend yield, combined with companies need to add to their technology to improve the productivity of the employees that they're not going to be adding on to in the future. But I would say look toward the value side. If we see more gravitation, more interest in value stocks, that implies that investors think that there's life and that they could actually sit with them for a little while they recover.
Sam Stovall, great to see you.
Thanks, Dagan.
And thanks for the humor this morning before 6:30.